No.
So
How
it's
many
up.
guys we got on?
Right now, it's just 20 people on here, so we're 8 minutes early though. But I just want to get on and get the kinks worked out. We just did, so we're good to go.
Right. I was just talking to a couple guys in the group. We were celebrating our S&P short the other day.
Oh yeah.
Yeah, have you been following that post? I bought some
Oh yeah,
SPX
your was it SPXU or something like that? The two times ETF for short
three times bear.
nice, dude. You know, I did think about that this morning when I saw the market down pre-market.
I had to take some gains off.
Nice. Well, those puts, or are you just short or long the ETF?
Now, I'm just shorting the ETF. I think that's a little simpler.
Hmm.
And once I can kind of master this bear market strategy, and then I'll probably inject, more leverage than the three times.
Okay. Hey, where'd you get that picture from? I'm curious.
My wife got it off the internet, and then she framed it. I got like a picture of Wall Street and some other stock stuff. I got this new office, so I'm definitely going with a stock market theme, trying to have like an old classic stock market look to it.
That's cool. I wouldn't mind having. I got like I just put a board up, a cork board. I got some pictures of my kids and stuff, and I got a couple things over there. I got from when I was in the Marines, my mom did like a plaque for me. I got that up there, and then my brother hit a hole in one time,
Really?
and somebody made him. My dad made him a shadow box for it. It's pretty cool. Let me see if I can see. You see the
Oh
shadow
yeah,
box?
yeah, that's nice.
Yeah, it's up there. Down there at the end. That's the shadow box, and so it's pretty cool.
That is cool. I'm pretty pumped because I had a buddy of mine come over and hang a TV in this office.
Uh-huh.
I can sit here and work and watch, anything I want, and
Nice.
yeah.
You know, I've seen too with the trend with TVs now is that they're going back to the curved screens. I don't know if you've seen that or not, but
I haven't. I'm not
yeah,
that
they're
nitty.
going. You know, those curved screens used to be like this, and now they're going to be like that.
Go figure. We'll see what Apple will do when it comes out with its TV.
Oh, okay. Yeah, I didn't even hear about it. I'm just looking at. That's one of the things I want to talk about in the Hangout is something that might, a couple stocks that might move based on the Apple Watch hoopla. So it's a little late now because the launch just happened, or the
Right.
launch happened, you know, late last year. They announced it, and then I think you can actually go buy one now. So, but there was one stock that moved into the announcement, not a huge move, but I was thinking, man, I should have thought about that. I don't know why I didn't think
Yeah.
about that beforehand. But anyways, going forward, it still might be something that makes a move. So, but we're still 5 minutes early, so I don't want to get into that yet.
No,
Um,
that's cool. I see you got a brown shirt on.
oh yeah, I got to represent the Browns, man. It builds character, man. You gotta stick with your team. I was born in Northeast Ohio, and I was raised from third grade up in Toledo, so Northwest. So we grew up on the Browns and the Buckeyes, and Saturdays and Sundays in the fall, you know, pretty much just revolved around that. And there's some good years there, no doubt, but it usually ended in heartbreak.
Well, I know about that. At least you got a sports team, man.
Yeah, yeah, you guys got the Razorbacks. Got a good coach, I think. You know,
Yeah, I think we do too. Um, got a lot of, as far as NFL fans, got a lot of Cowboys fans, but I'm actually an Eagles fan. My twin brother's a Cowboys fan, and I'm an Eagles fan, so we always give each other a hard time.
oh
Being,
yeah. For those of you watching, Steven does have a twin brother. They're fraternal twins, though, right? Not identical, right?
we're not identical.
But you have the same voice.
I don't think so, but I guess.
Even with my little brother, man, I can like I'll call him sometimes and he'll pick up the phone. go, hello? I'm like, man, that's me on the other
Yeah.
line
Pick
with
up.
that. Oh my gosh. Um, but I guess those of you that are already watching, you might be wondering who it is that I'm talking to. And I guess let's see, it's still 3 minutes, so I guess I'll keep it shrouded in secrecy here for a few more minutes.
Leave it a secret. Build it up.
But so those of you here early, you got a little. I guess you got a little bonus tour here. I'm gonna show it to you one more time. My wall over there, the wall of fame there.
The bonus.
You can see the pictures of the ultrasound pictures up there. That's my wife's pregnant, so we got 3 boys. So we got one on the way. But it's a girl, so we got our first girl on the way. Maybe I'll go. Maybe I'll go grab that.
Totally different. Women or girls and boys.
So I've been told.
My boy's a terror. My little girl sits still and just does her own thing.
Check out this 3D ultrasound. Isn't this cool? You can see her smiling.
It's amazing what technology can do these days.
Yeah, I mean, it was like, wow. Even the girl that does the ultrasound, she was pretty surprised that she got one of the baby smiling. So, but yeah. So let's see what's the market doing, man. It's kind of a gap down and stay down day.
Looking ugly, yeah.
Mm-hmm. So a lot of times, when it's kind of in the middle of an uptrend, you'll get gaps down, and then they'll come in and buy it up, and that's usually a pretty good sign. But this is so far looking like it might be, this might be a pullback that lasts a week or 2 or 3. Have you ever read any Peter Lynch's books?
All of them. I own them. I got some bookshelves that I ordered, and I can't wait to put all my books on them. Oh, yeah.
Okay, yeah, I just got that one little bookshelf over there.
Yeah, he's got One Up on Wall Street, Learn Earn, which I think is more of a beginner's book. And he's got one other that I own. So I own three of them.
Okay. Yeah, I was just reading. I was thinking about, the interest in the stock market is still really low right now compared to what it's been like at peak periods. And I was reading in his book, one of his books, he said that the people that lived through the crash of 1929 and the early 30s, it took the market decades to recover from that, and people, in the grand scheme of things, people fail to realize that. But so there's a lot of skepticism, like people growing up people that were coming of age, like in the 50s and the early 60s, there was a lot of skepticism about the market because it fell and took so long to zoom back to recover. And people were just sort of very skeptical of the market, and it's kind of like it is now. People are like, oh, it's just the money printing and the Fed, and
Right.
I understand that. I'm not for just printing money out of thin air either, but I mean you have to give the market credit for what it's done. And so I just think that overall pessimism in the country is why the market's probably going to keep going higher for another year or 2 or maybe 3. So that's kind of like my overall view of the market, I guess, if anybody's interested. But
Yeah, I think too many people focus on the why, like they're waiting for a bear market or, they watch too much CNBC and I probably watch CNBC one time all year. And all I just focus on is what's happening. Like who cares why?
right.
This is what's happening now. And if you continue to, follow the trend, if you're an index or large cap investor, whatever everyone else says, you're going to do fine. But I've been waiting on a bear market for 2.5, 3 years, and it hadn't happened.
Yeah, I thought I got scared in late 2011 when market was starting to act really wacky. Uh,
Yeah.
the grease thing, and it was like now the market is immune to grease. So if the market's going to make a big move again, it's going to have to be like back in 2011. If you think about it, the whole grease situation was a black swan because the market hadn't heard about it really before. Hadn't really, investors hadn't really, really considered, Greece leaving the European Union and how that would impact the euro and things like that. But now we've heard about so many times over the last few years, nobody cares. So it would have to be like a black swan type thing, maybe like if Putin were to invade Poland or something like that. Something it had to be something pretty crazy to really make the market swoon.
Well, 2011, that was when the S&P downgraded the U.S. too.
Yeah, yeah, and they got on Obama's crap list.
Yeah, he took care of them.
Yes, sir. Drinking coffee?
Yeah, I grabbed a cup when I walked out of the gym. I was like, I'll take some of that.
Okay. Cool. Oh yeah, I usually grab a cup of tea on my way out of the Y. But okay, guys. So I guess it might look like it's just me and my good friend Steven here just shooting the breeze, and I guess it kind of is. But we're also talking stocks and gonna be talking the market here, as we have been a little bit already. And I am Matt Morris from Microcap Millionaires at MM Publishing Inc. And on the other line is Stephen Kowitzel. He is a part of my private trader group and also a friend. He does the interviews for people who come on board, and I won't talk about that again for a while here, or at least until the end. But just to let you know who he is, and I did say that there would be a mystery guest, right? And so some of you probably heard me mention him in an email or on a webinar. So I guess Stephen, just tell us really quick tell us really quick. You had mentioned in the group about some ETF strategies that you're using, and maybe tell us about your most recent trade that you've been posting in the group.
Okay. Yeah, I use a market timing system based on another publisher that's basically correct 75% of the time. I took that and basically am using a leverage ETF strategy to get more growth, because that's why we're investors. We try to outperform the market. So I use a leverage ETF strategy to get in and then get out. And I recently took some profits. The NASDAQ broke and the S&P broke out to new highs, and we had a really good February. I took some profits, and I was talking to Matt about this just about 20 minutes ago. I decided to go short because the market was going up in decreasing volume. So I took a SPXS, which is a 3 times bear, the S&P, and I timed it pretty well, pretty much, within 1% of the top, and the market's been flushing out the last week or so, worked out really well. I've been using this ETF strategy as a core position instead of owning, mutual funds or some large caps, and it's not about getting at the perfect top or getting at the perfect bottom. It's really trying to get the meat of the move. And if you use leverage ETFs, then you can get a meat of the move and still outperform. So far it's worked out really well, and I got some guys that are talking to me about it that are really excited about it.
Sweet. So the basic, the kind of the gist of it is to try to avoid the times when the market, we all know it's been, an uptrend, but there are times where it may consolidate for, a few days or a few weeks, and so the goal is to try to just kind of stay out of those times, and just capitalize on either the short springs higher or lower, right?
Yeah, I'm going to say capitalize on the short springs higher. Right now I'm looking at kind of adding some extra growth with a short strategy, but I'd like everyone to focus on, capitalizing higher. And really the goal of this is you'll probably never sit through a 10 to 20% plus correction. It's really win by not losing and then outperform when the market's trending up. And over time, over 3, 5, 10 years, you'll do pretty well.
Cool, man. Well, especially with when the 3X ETFs came out a few years ago, I think people really were drawn to them. Some to their some to, it helped them lose a lot of money, unfortunately, but um, they do have time decay and things like that. But yeah, I think when you have a well-defined strategy where you say, okay, I'm not buying this for my retirement fund, and I'm not going to put it in there and check on it in 2 years. If you're looking at it fairly closely and checking on it at least once a day, then you can keep yourself from getting destroyed in these 3 times ETFs and their time decay.
Yeah, I mean it's meant to be simple, not sexy. I prefer if the market's going to trend for 2 3 months, I prefer to buy it and just sit until the market looks like it's stalling, and then take some profit. Sell into strength, take profits along the way. Um, yeah, it's meant to just be. I can't stress enough. It's meant to be really simple because I think it's easy to get overwhelmed in all these different strategies, and it's just a buy here, sell here, sit.
Right. Okay. Well, that's interesting, Stephen. We can never have enough good ideas, good trade ideas. I'll tell you that, man. They're always there's always money to be made out there. Just if you focus on the right things or the right tells, like I like to say. So I guess I want to talk a little bit about something that really started coming to me yesterday, and it kind of I guess crystallized in my mind a thought. And now it's a little late, I guess, for a trade. As in, taking a trade today is probably not a good thing. But for those of you that are tuning in, I do want to share it with you. And it is the ticker is WATT, and it's Watt or Energis Corporation, and it's one of those stocks that's one of those companies that's very, very speculative. I mean, and I say that because they reported earnings today, and they had no revenues and $9 million in expenses for the last quarter. So that's not a profitable business, obviously. But this is a low float stock. It's about $11 a share. I think it's exactly at $11 right now as I'm filming this, or as we're on the live hangout. And so that with the precipice being that this company, the stock could really fly if people, investors and traders start to really give credence to their business model, which is wireless charging. So if you think about it, that the Apple Watch, it sounds cool. People are going to go buy it starting today and show it off to their friends. It's going to be more like a status symbol or a just a gadget, right? But if people are really going to use it long term, I think that people are going to get sick of charging their watch every night. And if you think about it, we're used to charging our phones every night. Okay, we're used to that, but we're not used to charging our watch. I just went and got my watch battery replaced, and it lasted like 14 months, 14, 15 months, and I was disappointed. I was like, man, shouldn't this thing last at least 2 years? And the guy was explaining some things to me. But I think that if they can really get their story out there, and whether it actually comes to fruition or not, I don't know. They have a lot of roadblocks, as in how the FCC is going to regulate wireless charging and things like that, so people don't get electrocuted. But you can see the potential there if this really caught on, or if like a big publisher got a hold of this and did they could turn it into a publisher place. So those of you that have watched some of my videos and stuff, if you're a paid member in the members area, I talk about it with people in private groups sometimes. The publisher play is like when a big publisher, of course I don't want to name drop any company's names, but what they'll do is they'll do these teaser campaigns, and they'll say, this next company, they got the next biggest technology, that's going to make you rich, if you buy their stock now. And it's not a pump and dump, because they're not being paid to promote stock. But what they're doing is they're using that as a lead to get you to subscribe to their newsletter. And The ones that are usually the best are the ones that are not like a $49 a year newsletter. They're usually the expensive ones, the ones that are like, $1,500 for a year and up, or at least $1,000 a year. So I don't know why it's something to do with psychology, human psychology. If you spend more on a newsletter, you're more likely to play the stock, I guess. I'm not sure about all that, but this could be like a publisher play in the future based on the Apple Watch and being something that could really catapult higher. As an example, there's a stock UNXL. This made a move a couple years ago. Let me see if I can pull it up on a yearly chart or a weekly chart. I mean, all right. So let me see if I can share my screen here, Steven.
Yeah.
Not take any bets if I can figure it out or not.
Should be the green button. There you go.
Okay. So this chart right here, this is UNXL, and this is a weekly chart. So this is back here in 2012. This thing started to move from $7 to $39 or about $41 was the high over the course of several months. So, and then of course it falls right off the cliff and goes right back down to where it was. So that's usually how it plays out over time. Now, what happens is people get excited, and UNXL, if I remember correctly, the story was they had some new glass or something that had to do with smartphone screens that was cost efficient, and there was speculation that all the smartphone manufacturers were going to buy stuff from them and dump their current suppliers. It never happened, but the story was believable enough, and there was enough publisher play attention on this company that it made a huge move. So that's the type of thing that could happen if Watt were to get the attention that it needs to make a move. So it IPO'd back here in April last year and has been consolidating ever since, basically. All right, and so that's one I like that I'm watching. Another one that's of course a more liquid and a company that actually has operating business and everything is one that you might have heard about, and it's Lumber Liquidators. So this one's at $31 a share. Yesterday it fell off a cliff again and closed at 28 or 27.80, somewhere around there. And so this one I think is one that you have to consider as something that could really bounce hard. And you might say, well, Matt, it's already up 11% today. I know, but it's just something to watch as something that could really bounce hard, similar to how Herbalife bounced a couple years ago when Bill Ackman put out his short seller report on it, and the thing just got smashed. And then Carl Icahn comes out. If you remember, they had that infamous fight on CNBC where they're calling each other all kinds of names, and then the stock proceeded to bounce and basically took back all its losses. It recovered all its losses and went higher, and now it's back down again because the FTC's investigating the company. So a lot of drama there, but I think this could be kind of like the next Herbalife story, because this is just a short seller attack. That 60 Minutes probe was just they were tipped off by short sellers. They were tipped off by Whitney Tilson. 60 Minutes was. So I don't know if you guys know that or not, but that was that story aired only because a short seller called up 60 Minutes and said, hey, this story will run and get you good ratings, and by the way, it'll make them a lot of money, and it has, obviously, because look at the fall in Lumber Liquidators, guys. I mean, boom, right there. Just a couple weeks ago, it was at $68 a share. It's at 31 right now. So that's one I have on watch. And then of course, I do like JRJC. So they're supposed to report earnings coming up early April. So the stock's weak today because the whole market's weak, and emerging markets especially are weak. So it's selling off on a light volume, but it's still holding a $6 level. So I still like this one for a run up into the earnings. Another Chinese stock that just reported earnings that were okay, not great, but I think might bounce here pretty soon is MOBI. So I have that one on watch. And that's just a couple. I don't want to go through too many. I don't want to take up too much of your time. Hopefully you guys are enjoying a nice nice sandwich while you're hanging out with me and Steven. Steven's on the other line, by the way, for those of you that might have just hopped on the Hangout. And I'd like to get some feedback from you guys after it's over. Send me an email, let me know what you think about the format as this opposed to maybe a webinar where I'm just going through slides and things like that. So, of course, the webinar is a little more formal, right? A little more structured. This one it's a Google Hangout, so I figured, hey, let's just hang out. So stay true to the name. And so we talked about Steven. Steven talked about his ETF strategy. It's pretty basic, and it's working for him. And a few other people that are taking trades with him in our private trader group. Oh, and I want to talk about something that's a little bit magical. All right. So let me stop this. Okay, so now the screen share should be stopped. So what I did when I started our private group is I said, hey guys, let's work on trading together. Let's work on bouncing ideas off each other. Let's work on digging deeper and finding things that really can be a catalyst to help a stock make a big move. And I started a $10,000 trading account where I said, hey, I'll post all the trades to you guys as close as I can to real time. Within a few seconds, I gotta actually, put my order in and then post it and stuff like that. So it does take a few seconds. But, I said, I'll let you guys know what I'm doing when I do it, and we'll see what happens. I want to try to grow this account. Well, it's been a couple months, and let me see if I can pull up my spreadsheet. Okay, so as of right now, I'm looking at my spreadsheet right now, and since since I made my first trade on November 19th of last year, let's see, there's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So there's out of 14 trades, 12 of them are closed. 9 of them were winning trades, and 3 of them were losing trades. So that's a pretty good win percentage, but of course that doesn't tell the whole story, right? So a lot of these trades, what happened was I nipped a gain too early in the bud, just because I'm managing this money very tightly, and I wanna be careful that I grow it, and then I'll give it some more wiggle room on my positions. But so I don't have an exact number for you, but with only one open position, I think we're just right above 11,000 right now. So it's about 10% gain on the account. There's just one trade that's not been closed. So, and the reason I think that I've done okay, and I think that I'm going to continue to do okay with that account and continue to hit singles, hopefully hit some doubles and triples that'll quickly grow the account, is because of something that I said in the email. If you remember in the email when you signed up for the Hangout, guys, was I put an A, and then I put some blank spaces after it. And if we were doing a webinar right now, I guess I would ask you if everybody could guess what that word is. So let me just give you about 5 seconds to kind of guess what that word might be. It starts with an A.
I don't have a clue.
You don't have a clue? All right, that I think helps people become very good traders and very focused, to where even if you lose money, you'll learn a heck of a lot because you'll really be focused and paying attention. And so that word is accountability. So when I have money that I'm trading and people know everything that I'm doing with it, I'm not going to go out and make that wild, crazy trade that, I think like, hey, I might score big on that, right? So I'm not going to do that because there's an element of accountability. Or, I know, hey, this isn't really a trade where I've done my research. This isn't really a trade where, I've identified specific tells that I've seen in the past, help spark stocks higher. If I don't see what I need to see, what I should see, or like some people say, if I'm not following my rules, then I'm not going to take the trade because that trade is in the open forum, or at least for people in our private trader group. We call it the Elite Trader Group. So I think that probably makes sense for those of you that are watching. If someone's looking over your shoulder and saying, hey, let's do this right, then you're more apt to take it more seriously. You're more apt to not take those dumb gamble trades where we usually lose, right? And so probably some of you can relate with that, especially maybe with penny stocks under 50 cents a share, or call options that are way out of the money, weekly options that you take a gamble on, right? So with accountability, you won't do that because you're like, what, this I need to only take trades where the odds are in my favor based on the research that I've done. Don't know everything, I don't know everything that I could know, but I'm continuing to learn. I'll tell you, this open forum 10K account has really been a tremendous learning experience for me, and I think it's helping a lot of people in the group too, whether or not they're actually following the trades or not. So, but what do you think about that, Stephen?
Yeah, no, I agree, and I don't know why I didn't get accountability, but I don't know if you saw my post the other day on an ETF strategy. I actually said, here are the rules, but I told on myself, I was like, I actually broke my own rules. This time it worked out, but 75% of the times I break my rules, I lose. And then I just look at myself and I'm like, you deserve it. So the rules are meant in place for a reason, but that accountability is huge.
Right. And it's like, my kids are starting baseball again, and, it's almost like, okay, we teach them, and I remember when I was playing Little League, swing level, hit the ball hard, don't try to hit a home run, because it almost seems to happen without fail. When you try to swing for the fences, you strike out.
Yeah, you bet. You bet.
So, but the thing is, when you apply the fundamentals and you do follow a good set of rules like you're talking about, Stephen, sometimes you will hit a home run, even though that wasn't your intent. Your intent was just to hit a single. Your intent was just to get on base. And I think there's a good parallel there with trading in general, and specifically trading in small cap stocks where the risk is higher, but the potential reward is there too. Say, for example, I've been sitting here patiently, and I've been getting kind of a little impatient, to be transparent. Just like, man, like, where is the next lake? Where's the next LAKE type move? Because I want to find it. And it's frustrating to me that I haven't found one in a little while. And like the biotech stocks, the cancer stocks that have been moving since the new year, it's like, man, I really wish I would have played them, but as I've admitted several times, the biotech stocks are just, I just don't really understand them as well as I understand, companies that just have a normal business model. So, but in hindsight, I know now that if something pops up, even if it's an industry or a business that's maybe a pharma or a biotech, and I think it could be a multi-day move, then hey, that's what you get in with the stop for. So, but yeah, so just the bottom line though is you just step up to the plate and aim to hit a single, and sometimes you'll hit a double, sometimes you'll hit a triple, maybe a home run. You still have your strikeouts, but overall you'll do well, or you position yourself to do well. So let me see if there's anything else. I'm so used to having people type in during like a webinar, so I'm like, okay, I'm just going off myself, feeding off. I do have Steven on the line though, so I'm feeding off Steven a little bit. So if you guys joined us late, so Steven is my mystery guest, and he's part of our Elite Trader group, and he's been sharing some tips and tricks that he's been using to score some nice wins with ETF trading. So and you can trade an ETF with a small account too. You don't have to have $500,000 in your trading account to trade an ETF and still come out with a nice little cash gain. So so he's been sharing some info about that, and let's let's see. Oh, that noise is my briefing.com. So that's my new toy, is my briefing.com account. They do a really good job. If you got a watch list of stocks, they keep you posted on everything that happens in your watch list, and give you some good ideas to sift through as far as stocks that might be getting ready to make some nice start some nice uptrends.
I'd like to share a stock.
Sure.
Yeah. So I think the more people hang around me, they understand that I'm not looking for that home run play. I'm just looking for consistency. One stock that I've been looking at lately that looks like it's got a lot of accumulation on the weekly chart over the last 6 months is LinkedIn. Now, I don't know if you want to pull that stock up. Now, I think this could be like an IRA type stock that could have, continue to have a 2 or 3 year move. And why I like it I love it from a fundamental standpoint because it's that large cap growth stock that's got accelerating earnings. So when you look at stocks that are going to make these, 12 to 24 month moves, their earnings, fundamentally speaking, are accelerating. Their sales are accelerating. I'm an avid user of LinkedIn, and technically you can see are you looking at the daily chart? Yep. You can see this gap up that just happened a couple weeks ago. Now, typically gaps are filled, but what's happening with this gap up is it's trading sideways, and the market is starting to come under pressure. Mm-hmm. When you have these growth stocks, when the market's starting to come under pressure, I typically like to see which stocks are holding up the best. Mm-hmm. Because when the market, goes back on a confirmed uptrend, those are the stocks that are probably going to be your easiest gains or your easiest holds. So again, LinkedIn is not sexy, but I think that there is a lot of room for growth, especially because I get on there, I'm a user, and so I have conviction in the story. The fundamentals are sound. Technically speaking, everything looks right. I think that the stock is going to trade sideways until it kisses that 50-day moving average, and then it's probably just going to be a slow grind up, assuming the market, will have an average year or even, unless it just falls under us. So,
right.
There's my pick.
Cool, man. I remember when LinkedIn that day I IPO'd, it was a crazy mover.
Yeah. I think that this could be, like $500, $600 stock. I think this got plenty of room to grow. I think Facebook is crowded, and a lot of people haven't even really started to advertise on LinkedIn.
Yeah. Okay. Yeah, LinkedIn, Facebook, and other social media, Twitter.
Yeah, LinkedIn definitely isn't a value play. It's a growth play.
Mm-hmm. Well, cool, man. That's a good little nugget there. So Steve is basically talking about relative strength on growth stocks, and then once the market kind of gets its shakes off the bearishness, then those are the ones that zoom up the best for you. If you're talking big board stocks. And all right, well, let's see, it's 12:30, and so I promised to keep this fairly short. So what I want to do is I'm going to stop sharing this. And so before I let you guys go, and hopefully you've enjoyed hanging out with me and Steven, is I want to invite you to join us in our private trader group. So if you like the things that we've been discussing, you're like, what, that's interesting, I'd like to learn more about that, whether it's, just, learning to embrace that accountability as a trader, and so you can not just follow along with my trades, but, post your own ideas in there and let us all kind of drill down together so that we're, avoiding trades that can really, really be detrimental for our accounts, and learning to focus on the ones that can be really beneficial to us. Then what I want you to do, there should be a button beneath this video, as long as you came to the page that I linked up on. Now if you're like on my Google Plus page, then you won't see it, but assuming that you do see that button, it should be a green button that says next step. And so if you click on that button, folks, it'll take you to another page, and there'll be an application on that page where you fill that out. and then there'll also be a video of me and Steven, just so you can kind of hear him talk a little bit more and give a little bit about his background. And so if you want to join us, we do have some openings today where you can fill an application and reserve a time slot with Steven to talk with him and potentially join us in our Elite Trader group. So this is just for serious-minded people. Okay, so if you're just starting out, if you're like total newbie, I'll just be flat out with you. This probably isn't for you. Okay, but that doesn't mean get discouraged. Just stick around, learn all you can, and then maybe down the road it would be a good fit for you. So, but if you do have some trading experience and you want to get to the next level, so say you're right here, you know some things, you've learned some things through the School of Hard Knocks and just by your own research, and you want to break through that, right? You want to get to the next level up here. Not because I know it all, not because Steven knows it all, but because you're a part of a group where people contribute, right? And so it's not like Yahoo message boards where any old joker can post anything they want, right? This is only things where people are focused on what they're doing to post things that are beneficial not only to themselves but to the other people in the group. Okay, and so that's why we need to interview you, because we want to make sure that you're a good fit. And so if you want to see if you're a good fit to join our private trader group, all you need to do is click the button beneath this video that says next step and then fill out the application. Okay, and if you happen to be watching this on my Google Plus page or something like that where you don't see a button, then what you need to do is type in microcapmillionaires.com/apply into your browser, and then that'll forward you to the application page. Okay, so it's microcapmillionaires.com/apply, and then hit return your browser, and then boom, it should redirect you to the application page. Okay, so all right, Steven. Well, thanks for joining me, man. I had fun talking shop with you. Okay. So, all right, folks, we'll go ahead and cut it off here. And once again, the button beneath this video if you'd like to apply, or microcapmillionaires.com/apply. Okay. All right, everybody, have a great day.